Good evening, everyone. Am I audible to all of you? Let me confirm. Yes. Let me just wait for 1 minute. Let's confirm that all of you are. Hold on. Yes, I'm live. Good evening, everyone. Please type a yes in the chat box. Good evening, Rahul. Good evening, Subhi. Hope you're doing good. Hope everyone is doing good, friends. Yes, so welcome to the weekly MCQ batch wherein we are doing MCQs every Sunday. Sorry, friends, last Sunday evening I could not go live because there was a sudden power failure and I just couldn't come up. And Monday, Tuesday, I wasn't available. That's the reason I have gone live today. Good evening, Soumya, Sharad, Sebin, Sanika, Subhi, Krishnapriya, Divya, Soumya. Good evening, everyone. Very, very happy to see all of you live, friends. Even before I start with today's session, let us just go to the test on security evaluation. Let us do some evaluation. Friends, out of 122 students who have enrolled for the batch, 71 students have written the exam. On an average, these students have scored around 22 marks out of 50. So that is above 40 percentage. So friends, anybody who has got above the average of 22 is ideally very good. But I would still recommend a minimum of about 30 marks will be excellent for all of you, friends. This way, every Sunday you write an exam, 50-50 questions. I assure you, friends, you will get very good exposure, and upcoming exam that's happening in January, you will be able to score wonderful marks. Not only that, friends, I want to share one more very, very important news with all of you. I am going to come live with a super 30. Not only me, there is a team of 5 faculties. Hariharan sir is there, Arpita Tulsian ma'am is there, Jose Kurian sir is there, Aarti Lahoti ma'am is there, I am there. We are going live with a super 30. The top good 30 questions expected for the upcoming January examination. So they will be limited questions which will be covering from all the topics, friends. Everybody clear with this part? So stay tuned in the WhatsApp mentoring group. I will be sharing a new groups link over there and I will be updating you about that very, very soon. So this weekly test along with the Super 30 that I'm doing, and later on I'm planning one more live event, not committing now. Once the dates are confirmed, I will inform to you that also. All right, friends? Yes. So now here in this test, let's just appreciate the people who have scored very good marks. Aditya, 40 out of 50. You have got the best marks. Excellent. Keep it up. Proud of you. Sandra, 36. Abhirami, 36. Alina, 35. Sebin, 35. Soumya, 35. Amrita, 34. Rahul, 34. Nitya, 32. Sendil, 32. Sendil, 32. Sendil, did you write the exam 2 times? Both the times you have got 32 marks. Alina, 31. Harita, Skanda, Sanika, Divya, Merin, Nitin, Hira, Jayashri, Harita, up to here 31 marks, friends. Above 30, I'm telling, excellent job to others also, like anybody who's got above 25 is also very, very good. Gayatri, Dharmesh, Raimol, Simon, etc. But I want to just keep the borderline limit at 60%. That is 31 out of 50. All of you, excellent job. Keep it up. Keep writing exams like this, friends. I will work with you. We will work together. We will win together. Today, I have come live for two particular things, friends. One, I want to discuss the concepts so that we all can revise the concepts also together. And every week we start revising the concept. You get double revision over there. Am I right? So here I will ask you to add yourself to another batch which is called as the AFM Success Batch. The batch code is AFM Success. I'm not sure if you're already a part of this batch. If you're not a part of this batch, can you just go and give a batch request right away now? AFM Success. I will add you here. I will tell you what is the advantage of adding you here once you join inside. So just write down this somewhere so that you know this batch, this is a very useful batch, friends. For many students, this is a very, very useful batch. So in this batch, you have to go to two locations, AFM success series. Just write this down so that you all can use this. That is the objective behind this. When you go to the content, you have study material and then you have the videos also. Okay, so you have to click on two things. One, you have to click on the videos. Two, you have to click on the study material. All right. So when you click on the videos, inside the videos, you get revision lectures. So basically what I'm doing in this revision lectures is I am revising each chapter in just 1 hour. In just 1 hour. Same way when you go to study material, here I will be giving you a formula summary. So entire formula summary is coming in one particular page. Everybody clear with this part? So whoever is giving me a request now, I'm adding you now itself. Others can give me later. I will add it some other time. Praveen, I've added you. Priyanka, Shruti, I have added you also. All right. Fine. So that part is done. So just note it down, friends. So now I'll just show you when you go to videos, for example. Here, if you see, there is a video on security analysis. I believe 1 minute. Portfolio mergers, international finance. Okay. So this one is the one, basics and security analysis. So when you come here, you see the duration, it is 54 minutes. But in this 54 minutes, I am covering all the concepts, friends, okay, of whatever we are going to learn right now, okay. So that way, in very, very less time, you will be able to revise the entire topics. That is the objective of this. Anyways, right now also we are going to do a revision using the notes that is available over here. But later on, whenever you want to do a revision, you can always use that feature. It is available for all the students of MCQ batch free of cost. All right. Now, shall we start revising the concepts over here? Okay. So this is the basics. We don't need to go to the basics. Security valuation. This is what you wrote. Friends, value of a bond is found using the present value of future cash flows. Not only the value of a bond, friends, value of any asset is nothing but it is the present value of future cash flows that the asset can actually generate. Everybody clear? When you talk about a bond, what exactly is a bond? Bond is nothing but something issued by the government. It is actually risk free. Okay, so what happens in case of a bond is basically, you will get coupon amount and you will also get a redemption value. Are you all clear with this part now? So when you talk about a bond, value of a bond is nothing but it is the present value of future cash flows. What are the future cash flows in case of a bond? One is the coupon amount present value. Two is the present value of redemption value. Everybody clear with this part now? Yes. Next thing, coupon. What is coupon? Coupons is nothing but they are the fixed payment that you pay on the bond. Friends, when I'm talking over here, I request you all to orally tell the answers yourself also so that you get that, impact. When you orally speak, it has a much bigger impact than when you're just listening. So this 30 minutes that when you're with me, I request you all to keep talking and learn actively. There are two types of learning. One is called as the active learning, other one is called as the passive learning. Active learning means you learn actively, you talk, it has a bigger impression in your mind. So in less time, you can learn more. Passive learning, it will take more time. So suppose I tell now you're listening. You listen again and again. 3 times you listen, whatever you remember, same effect will be there if you listen now and you talk along with me. Everybody clear with this part now? All right, one moment. All right, friends, are you all clear so far? Then we will talk about yield. Yield is nothing but it is the bond holders expectation. What is yield? Yield is nothing but it is the bondholder's expectation. So discount factor is investor's expectation. Yield is bondholder's expectation. So there are 5 types of yield. Ultimately, whether it is any of the 5 yields, in the long run, all of these are nothing but the IRR. IRR is the rate at which your NPV becomes zero. Everybody clear with this part now? Perfect. So in that, the first yield that you have to learn is current yield. Current yield, the formula is coupon amount divided by current market price. This is normally for perpetual bonds, friends. It's wrongly written as regular bond. It's actually perpetual bond. Just correct that one part. It is for perpetual bond. All right. Yes, I'll go to the next one now. Bond equivalent yield. Bond equivalent yield is normally used for zero coupon bond, friends. So there the formula will be discount amount divided by current market price. Okay, so mainly for zero coupon bond. Then you have effective annual return. The formula is 1 plus y whole power n minus 1. Bond equivalent yield is done without considering compounding. But effective annual return is done after considering what? After considering compounding over here. Everybody clear? Then you go to YTM, yield to maturity. The formula for yield to maturity is coupon amount plus redemption value minus issue price divided by life whole divided by redemption value plus issue price divided by 2. Or here you get a fixed coupon payment. RV minus IP will give you the total gap divided by life will give you the average money that you pay on an every year basis. This, when you divide it by the average investment, you get the investor's required return. Everybody clear with this part now? Next part is average duration. In simple terms, the meaning of the word average duration is within how many years will you get your money back. That is what you call it as average duration. The formula for average duration is 1 plus y divided by y minus 1 plus y plus n into c minus y divided by c into 1 plus y whole power n minus 1 plus y. Why? Many of you will ask me this question, but please by heart this formula, write it down 10 times. It will get in your subconscious mind. Don't skip anything from the exam point of view. Study 100%, then only you will get 60% marks. Everybody clear with this part? There's a table method also that you can use for finding out the duration, and the table method is year, cash flow, discount factor, discounted cash flow, weight into the life. Everybody clear with this part? That is how you go and find out your average duration. Everybody clear with this part? Next thing is what we call it as the volatility of the bond. So volatility is found out using the formula duration divided by 1 plus yield. So here you get the percentage. So let us say you get the answer as 5%. What it means is that for every 1% change in the yield, the price will change by how much percentage? Price will change by 5%. Is everybody clear with this part now? Is everybody clear with this part? Perfect. I'll now go to the next one. After volatility, friends, there is one more thing to learn now that is called as convexity of the bond. So convexity basically says that in volatility, suppose I get 5%, the logic is for every 1% change in yield, price will change by exactly 5. But in reality, price will not change by exactly 5. It may change by 5, it may change by 5.5, it may change by 4.5 also. So there is a fluctuation that is coming over there. Am I right? That fluctuation is what we call it as convexity, because it happens because the bond is always convex in nature, friends. Is everybody clear with this part now? Please type a yes in the chat box. And I hope my audio, video, everything is absolutely clear for all of you, friends. Perfect. Can I go to the next part now? So we are done with bond valuation concept revision. Now we are going to learn about dividend policy chapter, where you have the first concept called as dividend rate. Dividend rate is found out using the formula DPS divided by face value. So suppose you get the answer as 15%. It means for every 100 rupees of face value, I am getting 15 rupees of dividend. Everybody clear with this part? Dividend yield, the formula is DPS divided by MPS or D1 divided by face value. So that means for every 100 rupees of market price, 5 rupees my dividend. Dividend payout is DPS by EPS. So for every 100 rupees of earnings, 40 rupees dividend, 60 rupees retained earnings. Keeping that, we can also find out the retention ratio, and the formula for retention ratio is 1 minus payout ratio. 100% minus how much ever is the dividend payout ratio. Everybody clear so far, friends? Thank you so much, everyone. Yes. Then we go to the common sense approach. Okay. Common sense approach, there are two words, R, KE. R means what is the actual return the company gives. KE means what is the investor's expectation. So if R, the return given by company is let's say 20%, but the investor expectation is only 12%, R becomes greater than KE. In that case, nobody will ask for payout. The payout ratio will be 0% because they will say company is giving 12, my expectation is only 10. Let the money be in the company because that way the money will grow faster. When R is less than KE, company is giving only 7. I am expecting 10. Please give me 100% dividend because when I get the dividend, I can put it in my father's business where I will get 10% return. Why should I get only 7% return with the company? That is the meaning of R less than KE. So I'll repeat once again. When R is more than KE, you expect a 0% payout. When R is less than KE, you expect a 100% payout. And when R is equal to KE, when R is equal to KE, it's an indifference point. Okay, you can either go for 0%, 100%, 20%. I don't care. Are you all clear so far, friends? Fantastic. Next, I will go for the Gordon's model. Okay. So when you go to the Gordon's model, the formula is P0 is equal to D1 divided by KE minus G. I told you earlier, value of any asset is nothing but it is the present value of future cash flows. Similarly, value of a share is also nothing but it is the present value of future cash flows. That using perpetuity formula, cash flow divided by discount factor minus inflation, using the cash flow formula, you get the answer as D1 divided by KE minus G. Everybody clear? The next model is Walter's model. As per Walter's model, value of a share will have two parts. Part 1, present value of dividends. That is where you will get the number over here as D divided by KE. Everybody clear? This one. Other one will be E minus D into R by KE whole divided by KE. This part is present value of dividend. This part is present value of, 1 minute, present value of retained earnings reinvested. I don't know why it's vanishing from the board, friends, when I'm writing there. That's okay, right? So D by KE plus E minus D into R by KE whole divided by KE. Everybody clear with this part now? Next, then we learned about MPS after dividend. Friends, MPS after dividend will be basically whatever is the dividend paid, your price will fall down. So MPS before dividend minus dividend amount will give you MPS after dividend. MPS after bonus is nothing but it is the market value after bonus divided by number of shares after bonus. Everybody clear with this part now? Yeah. Next one. MPS after buyback will be market value after buyback divided by number of shares after buyback. Stock split. One share of 10 rupees broken down into two shares of 5 rupees, what we call it as 2:1 stock split. Reverse stock split is two shares of 5 rupees merged into one share of 10 rupees, what you call it as reversed stock split. That's it, friends. We have covered bond valuation also. We have covered share valuation also. Are you all thoroughly clear so far? If yes, please type a yes in the chat box, friends. Like this, every week we will revise chapter by chapter. Okay, that way we will get double revision. You're studying on your own, writing the exam, discussing the concepts with me. All these concepts will get in your subconscious mind. Then when you write the exam, you will win. It was my promise to many of my students, in fact all of my students, that I will work with you till the examination. I will keep that promise, friends. Okay, now before even I proceed further, just one small announcement, friends. On November 17th, I am coming to Kochi for a 12 days of intensive batch. If anybody who has not studied wants to learn it in 12 days of time, you can just message me. I will connect you with the concerned person and you can join for the batch. If you are my past student, just one request, pass on this information so that others can just become aware of this, so they can also take all the benefits of the classes that you have already experienced, friends. Okay, next point, for CA inter students, I am coming to Thrissur on, I think next week I am coming to Thrissur at Province. There also I am going to do a 5 days crash. So please pass this information with your inter students also. Now, since I have done with the concepts, friends, we have also done revising both the chapters of bond valuation and share valuation. Now, I'll give you some time. If you have any doubts, please share it with me. I will clear all those doubts for you. Thank you so much. Yes, friends, tell me. Whatever doubts you have, you can ask me now. I think I didn't inform about this earlier. Next time, friends, when you're attending my live session, you keep your doubts ready so that the moment you type it, just refer it to me correctly. Give me either the mastery book reference number or the ODB book reference number. That in this page here, I have this doubt. So I can involve, I can clarify the doubt for you. Fine. I hope you all have my number also with you, friends. If you have some doubts which you are unable to ask now, you have to ask me later on. You can WhatsApp me on this number also. All right. I will be available, but it normally takes me 2 to 3 days of time in which I will revert to your doubts for sure. Will that be okay, friends? Yes. So, shall we wrap up our session with this, friends? Coming week, what is the target? What is the exam you're going to have next Sunday? Tell me, friends. Portfolio management. So please work hard, write the exam. This time, friends, last time if you have scored 30 out of 50, this time you work hard so that you can score 50 out of 50. Let's work together, friends. Let's win together. I am with you. Thank you so much, everyone. Study well, take care, be in touch. Let's win together. Thanks a lot.